comments here this morning on the labor market and on the auto finance market. So first off, obviously we get a lot of labor data this week. The data I thought was interesting was actually the job cuts data out of Challenger, and I thought I'd just run through a few of these numbers because they are pretty significant. So on a overall basis, through the first 11 months of the year, total job cuts announced by companies are coming in at 686,000. That's a 115% increase year over year from 320,000. And interestingly, notwithstanding the January to November 2020 period, obviously during the beginning of COVID, that was this year the highest January through November job cut period since 2009. So, clearly on the job cut front, the labor market is showing some signs of progressive deterioration here.
It's always interesting. Life is, especially when you're having a moment where you can listen to Josh Steiner and still get the dopamine rush that you'll have when the NFP number hits. Could you pay attention to both at the same time? I don't know. I did. I'm generally unaffected though. I feel nothing. But the number, so there are two things, right? Like first, let's just address the number. It's what I thought it was, what you thought it was, quad 2 in November. So you get a bounce. So it's closer to 200,000. Whoever was looking for payrolls to be a bomb like last month had that wrong. Yeah, it'll get revised. We understand all that. But the key, and I heard it so many times from people that need the Fed to cut rates, and this is really the catalyst, is that once the unemployment rate shoots above 4%, then the Fed's going to know that, we're going to go from 4 to 5 and they need to cut rates. Well, the unemployment rate, unfortunately for that narrative, went from 3.9 to 3.7. Okay, it went down. So, and again, I can't remind people enough times that the Fed does care about levels, headline political levels. So that's gone as a catalyst in terms of like for further degradation in bond yields. And then next week you got the Fed that's going to probably say the same thing. So, and you have a CPI number that's not going to go down nearly enough relative to what consensus hopes. So to review, you got to put all that together. I mean, including what Steiner said, which is we know people are losing their jobs. We know that the economy is slowing. The bond market and the commodities market knows that. Parts mostly of the small cap, mid cap part of the stock market knows that too. Most of it got discounted quickly into the lows of October. But now you got to deal with today. Yeah, you got to deal with the counter headline to that, which may be the last one, Steiner, to be clear on our methodology, because we go a monthly quad 2 for November. This is a December, you're getting the November jobs report, right? So it's a lot. Like I said, it's an interesting thing, life is.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.